I think we should begin. All right, so 18 is a good number. I'm sure others will be coming very soon. Okay, so Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. And welcome, everyone, your brothers and sisters, uncles and aunties, enthusiasts of Islamic finance, and everyone in between. Right? Hope you guys are doing well wherever you may be in this world. It's a good morning, a good afternoon, or good evening to you. Let's start off with Surah Al-Fatiha. All right. رب اشرح لي صدري رب اشرح لنا صدورنا ويسر لنا امورنا واحلل عقدة من ألسنتنا يفقهوا قولنا ربنا زدنا علما نافعا وارزقنا فهما واسعا والحمد لله رب العالمين. So let me get into the introduction. Islamic finance has come a long way from its inception. From what started off as a noble initiative, or a humble initiative, I should say, by Mit Ghamar, right? Let's say the investment entity in Egypt, right? With the intention of offering Muslims an investment platform that complies with the Sharia, today has grown to become a global industry worth $4.5 trillion, I should say. Now, we should point out that this figure only represents 2.5% of the global market share. However, considering it only started in the early 60s, which makes it relatively, actually far younger than the global conventional financial industry, it is neither wise nor valuable for one to dismiss or sabotage the tremendous efforts and major contributions of key players across the Muslim world. Hence, it must be reaffirmed that the Islamic finance industry has indeed come a long way. Islamic finance's ultimate value proposition is that its principles are derived from the divine sources known as the Quran and prophetic teachings, i.e. the Sunnah. Over time, industry players have developed various financial products to serve the needs and demands of customers. Now, in their quest to do so, there have been some products, I should say, that have received heavy criticism by scholars or from scholars for their fictitious nature, right? Their detrimental effects on the macro economy and even in some cases the micro level, right? As such, these discussions or these products have been tabled for debate after debate after debate after debate, and some very passionately done. Now, the question still remains: is the Sharia stance clear on which genre or which flavor of financing it prefers over the other? Honestly, I do not have the answers, right? I have my answer. However, alhamdulillah, we are joined today by Ahl al-Dhikr, right, to help us resolve this mystery. So allow me to introduce a few people. Firstly, a distinguished figure in Islamic finance, holding a PhD and an MSc from INSEF, Malaysia, and serving as an IOFI certified Sharia advisor and auditor. A man or mufti whose prowess complements his practical knowledge, which is exemplified by his being a registered Sharia advisor with the Securities Commission of Malaysia and a certified Islamic finance executive from Ethica, Dubai. He's the founder and CEO of Adil Advisory Malaysia, specializing in Sharia advisory, consultancy, and training services. He's the co-founder of IFA Consultancy in Bangladesh, a pioneering institution promoting Islamic finance through training programs, workshops, and consultancy services. With leadership roles at Ethis, an Islamic fintech group, he contributes significantly to Islamic fintech, particularly in Indonesia and Malaysia. He's an active Sharia committee member for institutions in multiple countries, engaging with 2 working groups for the Governance Standard Committee at IOFI. He holds professional memberships with Asas and SIF. Recognized for his various contributions, he received the BAF 2023 award from the Bangladesh IOFI Fellowship Forum. He's none other than Dr. Mufti Yusuf Sultan, who I would have the honor to welcome to make the opening remarks before I introduce the second honorable speaker. Tfaddal Mufti, Dr. Mufti Yusuf Sultan, with your opening remarks.
Assalamu alaikum wa rahmatullahi wa barakatuh. Jazakumullah khairan, Brother Sanu, for your kind introduction and context to the session today. I would not take much time because we want to hear today from our very own respected Sheikh Dr. Ziyad, Associate Professor at INSEF University, and our mentor, my personal mentor as well. I always admire him and follow him. Hafizahullah ta'ala wa ra'ah. The topic today is of significant importance about the debate, either we should prefer equity or debt financing. This is something that we always hear, the difference of opinions from the layman, from the Sharia scholars, Sharia fraternity, as well as the Muslim economists or Islamic economists. So I think the discussion that we would like to hear from Sheikh today, as well as you moderating the session, is to give us a crux of the matter in terms of Sharia, as well as from economic viewpoint, and also the path forward, moving forward, given the economic context today globally, with high inflation, increase in unemployment, the era of AI and this and that, and also the different wars that's happening around the globe. So how we conceptualize these into the discussion today in terms of the different types of financing? Is it just instruments, or these leave significant impact in our economies? So I think these are the few things I would like to hear from Sheikh as well as you for today. And I believe the audience today who are quite excited to hear on this debate as well. So without further ado, I would welcome everyone who have joined our session today, either through Zoom or our live streaming in YouTube, or might be watching us later on. And we hope that from the session today, we would have some good perspectives, some good learning points to help us move forward with this industry in the right manner, in the Sirat Mustaqim. May Allah subhanahu wa ta'ala grant us tawfiq. Jazakumullah khairan. I would like to request you, Brother Sano, to introduce the session and introduce our Shaykh as well. Jazakumullah khairan.
All right. Okay, so Barakallah Feek, Dr. Mufti Yusuf Sultan, for those opening remarks. Inshallah, let's proceed. Okay, so I would now like to introduce our key speaker, right, who is a distinguished Sharia advisor that sits on the Sharia board of over 12 Sharia boards, or the Sharia board of 12 Islamic financial institutions across the world, most notably HSBC Amana, based in Malaysia, where he is the chairman. Now, he's played a huge role in developing Islamic finance-related frameworks and educational programs, such as Malaysia's VBI, the Value-Based Intermediation, the VBIT, as well as INSEF's e-learning master's degree, respectively. Now, in addition to his numerous consultancy works, his various publications, mainly underscoring his influence in that mainly underscore his influence in shaping Sharia compliance and ethical practices within the Islamic finance sector, renders him an excellent fit as lead Sharia researcher at INSEF University's Center of Excellence for Islamic Social Finance. Now, he holds a double bachelor's degree, one in business finance from Anguilla Ruskin University, and the other in commerce and financial management from the University of Johannesburg, South Africa. He holds a master's degree in business administration from the Management College of Southern Africa, known as Mankosa. I hope I'm pronouncing it correctly. And a PhD from Islamic finance, a PhD in Islamic finance from INSEF University. Now, he has a profound knowledge in fiqh al-mu'amalat, which he studied at the hands of respected scholars in Cairo, Egypt. He is a South African legend and one of my favorite lecturers of all time. Brothers and sisters, let's give a warm welcome, right? In fact, let's give him a heated welcome, right? He's none other than Associate Professor Dr. Ziyad Muhammad.
Jazakumullah khair. This is quite an embarrassing introduction. Jazakumullah khair. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much for the welcome.
Barakallah feek, Ustad. How are you feeling today?
Alhamdulillah, it's nice and fresh and chilly as usual in Oxford. So yes, just taking in the wonderful weather. Alhamdulillah.
Alhamdulillah, alhamdulillah. That is great to hear. All right, so now that we have ascertained the state of affairs with regards to the Sheikh, then we can delve into the session. So, Sheikh, as just to highlight to the viewers as well as the participants, the respected participants, we're going to try to ensure that this is a free flow and an interactive session, right? So, inshallah, I have a list of questions I would like to ask, right? And based on your answers, inshallah, your answers would dictate the direction, inshallah, of this webinar, bi'idhnillah. So that way we can get the most out of it. And of course, right, Prophet ﷺ says, "La yu'minu ahadukum hatta yuhibba li akhihi ma yuhibbu li nafsihi." So I will not be selfish in asking all the questions. The participants would also have a chance to benefit, to ask their questions away. So please do note anything you feel the need to ask about, and hopefully we can make adequate time for questions and answers at the end. Right. So without further ado, let's begin with the questions. So the first question is one that is more general, right? Dear Professor Ziad, I have read reports that say that a great deal of financing in a lot of Islamic financial institutions, right? Some say 70 to 80, others say 80 to 90, depending on jurisdiction or where we are. But for the most part, right, I think we can go with a conservative number. Let's say 70 to 80% of financing in a lot of Islamic financial institutions, whether it be for financing for cars, household appliances, housing even, or even the purchase of machinery, right, equipment and raw materials, is done using murabaha, right? Now, I'm not going to get into the details of murabaha, right? Hopefully, we know what it is. It's a markup sale, right, in which I think no need to get into the details, right? Now, murabaha, as we know, is a debt-based financing instrument, right? So the first question I would like to pose is, why is it that Islamic financial institutions seem infatuated, right? So in love with debt financing, right? Why are debt financing instruments so prevalent within Islamic financial institutions?
نعم. بسم الله الرحمن الرحيم. الحمد لله. الحمد لله رب العالمين والصلاة والسلام على سيد المرسلين سيدنا محمد وعلى آله وأصحابه أجمعين. أما بعد، اللهم لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم. اللهم افتح علينا بحكمتك وانشر علينا برحمتك يا ذا الجلال والإكرام. Thank you very much, firstly, for Adal Advisory and my dear brothers and teachers, of course, Sheikh Yusuf and Sheikh Muhammad Sanu. As part of a class, we've always learned from each other, and I thank you for the opportunity here to share some of my thoughts. A very interesting question that you raise, and to begin with, perhaps a disclaimer is important because the title is quite provocative and interesting, and end to the debate of debt versus equity. Hopefully, we will be able to raise more questions and thoughts by the end of this session. I'm not sure if we would be able to close that debate, but we will raise some of the issues and certainly, some of the questions that I still have around the matter as well. So it's a constant learning experience. Let's move into your question. You ask why Islamic financial institutions are infatuated with debt instruments. Well, we have to understand the context, and you remember in class we have this mantra, and we say context matters. Context matters, and it matters at every level in terms of decision making, and that famous legal axiom or maxim in the Sharia that says when you want to determine a ruling on the matter, and that goes for debt and equity, then we have to look at the context, the full understanding of the context and the scenario before we can answer the question. Al-hukmu ala shay far'un an tasawwurihi, as we all know. So there's a typical economic and regulatory reason why Islamic financial institutions prefer debt. Then there is also a Sharia understanding that also promotes, the proliferation of debt-like instruments as well. And I'll explain why I am saying this. First of all, the context is that Islamic banks operate in a conventional regulation, a conventional banking system in the majority of the countries that they do operate in. Now, this means that it's a square peg, round hole scenario. We have Islamic finance, which is a strand, a pillar of Islamic economics as a whole. And Islamic economics is focused on socio-economic empowerment and social justice, fairness, and all those good things. And then as a tool of achieving this, an Islamic bank is supposed to empower and create an economy that is sustainable, responsible, and fair. In order to do this, it acts as a black box, and that black box is it manages and takes in surplus funds and then deals out to deficit units. That black box tries to create a balance from the financial perspective in the economy. Now, we know that the Sharia is all about balance. Ummatan wasatan is what the Quran tells us we are. We are a moderate middle nation. And as a witness to all other nations, we are that moderating variable. And to be that moderating variable, we need to stay away from extremes and be sincere on our path. Now, Islamic banks attempt to do this, and they begin with the clear prohibitions. So they stay away from the prohibitions. And in order to stay away from that, they need to provide instruments that are still profitable, yet they comply at all stages with the Sharia requirements. But they have their hands tied behind their backs. What does that mean? Well, first of all, the regulation that they operate in means that the regulation favors stability. And that's not a bad thing. Of course, we want financial stability. But with financial stability also comes a control of the cost of funds. And a control of the cost of funds through fancy policy and fiscal and monetary policies, looking at the distribution of money and monetary supply, money supply, we now realize that banks are really just a tool, a mechanism to fulfill the broader policies of government in nations that are expected to be stable and growing. Now, an Islamic bank is forced into this scenario, and forced into is not a bad thing here, because we all want nations that are stable and growing and good. But this regulation happens to be quite focused on debt-based financing. And this debt-based financing is there through the regulator because the interest rates are controlled, they have their ceilings, and they can be managed. And through this, and through the central banks giving and lending of money, you now have banks that are generally controlled in terms of pricing. The overall effect is that banks, central banks, and ultimately policy are there to achieve stability. So Islamic banks are forced into regulation, and we'll come back to whether they actually achieve stability or not. We're still arguing or mentioning why debt is so prevalent at Islamic banks. The second issue is that a bank by its very nature is a risk manager. It's a risk manager. And as a risk manager, it is risk averse. Being risk averse, it would look at any risk-based instruments with skepticism because it does not want to lose people's money. Bear in mind, an Islamic bank manages depositors' money and shareholders' money. To manage depositors' money, one has to be very careful, one has to be very diligent, and understand that any use of this deposit in financing, onward financing, must be done in a very careful manner, in a manner that ensures a payback, something that must come back and then goes back to the deposit pool. Together with principal, there is often dividend in the case of mudaraba. So an Islamic bank is risk averse. So number one, regulation forces it to move into primarily debt-based financing. Number two, risk aversion. An Islamic bank is risk averse by nature and therefore needs to protect depositors and shareholders. Hence, it offers debt-like instruments. Number three, and this is a very important point, as much as an Islamic bank wants to be involved in risk sharing, it has agency problems. It's faced with the moral hazard. And here I can give it to you theoretically and practically. From a moral hazard perspective, if we were to use pure risk sharing as the majority of the portfolio, it would mean that a bank would invest in a customer and benefit from the upside of the business and, of course, suffer from the downside of the business. This all relies on the fact that this customer will provide us with reliable, honest information. That means when the business is doing well, he will actually tell us the business is doing well and vice versa. The reality is, and having worked in several countries, I've seen them start off sincerely with risk-sharing instruments, investments, and financing, and then unfortunately move back into debt. And why do they do that? Well, and I'm talking about so many countries that we've worked in, and I'm not, pointing out any countries now specifically, but I'm only talking about experience. South Africa is where I'm from. We have a scenario where many businessmen use two books, okay, the book for the taxman and their own internal book. Their own internal book is the real book, and the book for the taxman ensures that they only look after themselves, making sure that they show just a little profit or primarily a loss. Now, as they enter into Islamic banking, they start providing the taxman's book to the bank, because the taxman's book means that they can share less profit with the bank and keep more profit for themselves. This is a South African dilemma. This is a Pakistani dilemma. This is a Kenyan dilemma. This is a Nigerian dilemma. And these are the countries that I've seen it firsthand, where banks are really disappointed and frustrated that they lose so much of money when they do musharaka financing and mudaraba financing, simply because customers that may have long beards and wear the jalabiyah and the jubba every day and are always in salah, in jama'ah, are still lying and dishonest when they give their account and record of returns to the Islamic bank. So the agency issue is a reality. And until and unless we change our behavior, an Islamic bank will find it quite difficult to actually go down the road of focusing on musharaka and mudaraba. So I've given you three so far. I will just highlight a few others, and this is because of the sake of time. I won't go into the details of them. The other one that comes to mind is market demand. Now, from a market demand perspective, I'm going to build from the agency problem, and let's look at what's in the entrepreneur's mind. He's saying, I'm making the effort, I'm selling the goods, I am having sleepless nights, I have to provide for my family. And in order to do that, I would not want to share my profits with the bank. So therefore, even the entrepreneur is now favoring a debt-based instrument as opposed to a risk-sharing instrument, because he wants to share less. He wants to share less. When there's loss, he's ready to share the loss. But when there's profit, he's not willing to share the profit. So in effect, he is saying, I prefer debt-based instruments simply because I am not willing to share my upside. Now, if you look at the theory of priorities in corporate finance, when we look at the cost of funds and which funds we would actually like to issue first, then we know that when a company is doing well, it really wants to issue more equity because it does not want to share the upside. So it issues bonds, it issues sukuk, because it limits the upside for the subscriber, for the one who is buying into the investment. But a company that is looking at expansion and is unaware of the risk, or is clear that maybe we may experience a risk of loss, they definitely would issue equity. And therefore we say equity issuance is going to be more expensive for a company to issue as opposed to a bond or a sukuk, because there they can manage their dividends and they only need to share a small part of their profits. So market demand from customers is that debt is better for us. If you ask someone who owns a motor vehicle or wants to finance a car through a bank, he would say, why would I want to have fluctuating installments every month? I would rather have a fixed installment every month that I can budget for. The same goes for a house owner. He does not want to pay much more because he's carefully budgeted his salary into his disposable income, his vehicle cost, his house cost, and his food and security cost and education. So if there is a fluctuation in the profit rate, then he may be out of the money. So now he demands for an instrument that does not expose him to volatile rates. This is market demand. Issues around historical precedents, meaning an Islamic bank is entering into a conventional banking space. And historical precedent is that a conventional bank does debt instruments. An Islamic bank that wants to function within this competitive environment needs to offer apples for apples. And therefore, they try to compare and offer similar products with a Sharia compliance leaning, but unfortunately, they end up offering and mimicking and imitating what conventional does, very much like debt instruments. Finally, the last one that comes to mind is it's a rational approach. It's a rational approach because an Islamic bank wants to survive. And to be sustainable, if it applies risk sharing as the majority of its financing, and it services a particular segment of the market, which is the upper, lower to middle and almost upper, that's the general segment, the middle segment is what an Islamic bank would service, then it would not want to be exposed to higher risk. So it's a rational thinking that naturally it wants to survive and provide profits for shareholders, in the long term, and therefore it opts for debt-like instruments. I hope that clarifies a little bit. I've given you 7 quick points on why Islamic banks prefer debt over equity.
All right. Jazakallah khair, Prof. Ziad, for that very profound response. Okay, so the discussion could go into many directions based on your answers right now, right? So you mentioned a lot of things, right? You've highlighted the reasons why Islamic financial institutions would prefer the debt-based model over the equity-based model, right? You mentioned regulatory reasons, right, where banks are operating within the larger conventional framework that incentivizes debt and, in a sense, discourages equity. Based on the regulations. You mentioned that banks are risk averse, right? They are risk managers and therefore they are risk averse. They're more careful and they engage in transactions that would ensure a payback, and that cannot be achieved in the equity model because that's not fair, right? Whereas in the debt model, there is a possibility. You mentioned the agency problem, right, where banks are not getting honest reports from their customers, right? Hence why they prefer to do the debt-based model that does not necessarily require the trust or the confidence or the relationship between them and their client, right? You mentioned as well the market demand, where you said entrepreneurs themselves, not only banks, but entrepreneurs themselves want to share less in profits, right? And if it is the case that they're sharing equity, then there's a higher chance, if their business is really successful, that they're sharing, they're sharing the fruits of their labor, right? Or let's say a bigger portion of their fruits of the labor, which would be discouraging to them. And you mentioned lastly that banks need to survive, right? Because risk sharing is risky. And if it is the case that they're using deposits of customers to finance individuals who are not very honest in their reporting, then the whole system collapses, right? So these are some of the the economic perspectives that you've highlighted very well, I believe, right? But I wanted to take the discussion more towards the Sharia's perspective, right? Because someone would argue, right? Not me, right? Someone might argue that it might be the case that banks their customers, regulators, and other relevant market players it might be the case that they prefer the debt-based model, but really we wanted to talk about the topic from the Islamic point of view, right? So trying to in an attempt to bring the discussion more towards what the Sharia says, right? The way I perceive it is as follows, right? And I need your help in correcting this notion that I have, right? The discussion is between two main market players, right? You have Sharia scholars on one hand, and then you have Muslim economists, right? Now, both argue essentially the ultimate goal is the same, which is to achieve human welfare and promote, equitable in a sense of, what is fair and just in transactions or the outcomes of it. But when it comes to the arguments that they raise, you have on one hand Sharia scholars saying, as long as it's halal, then we should not impose any constraints. Right. This is the general, obviously, yourself being a Sharia scholar, I'm not referring to you, but just the general idea that people hear. Sharia scholars on one hand are saying it's halal, therefore it should be allowed, right? Not just in terms of the argument of debt versus equity, but when we're talking about cryptocurrency and all these other aspects, as long as there is no clear nas stating that it is haram, therefore it should be halal. And then you have Muslim economists on the other hand, right? There are also scholars in their respective fields saying that no, yes, it might be halal, but if you look at it on a macro level, on a macroeconomic level, then we see the detrimental effects of a debt-centric economy, right? We know the global financial crises that have happened and other crises that have happened and that will happen as a result of excessive debt, right? So what essentially do you make of the discussion, right? What do you make of the discussion?
Okay, this is a very important discussion, and it gets to the root of the issue. So we know why banks may prefer debt over equity, and yes, you're quite right. You have these two schools, and perhaps one may add the third, which is the practitioner view. And the practitioner view is that I don't know what you're all going on about. Risk sharing is just not a fit for Islamic banks. It's actually debt-based instruments, and they actually work. They work. Now, we have to see all of this in context. First of all, from the Sharia lens, the promotion of a risk-sharing approach and understanding is well established in the Hadith. Now, this means that when the Prophet ﷺ, and we know these ahadith, and I'm going to try during this session to keep it as simple as possible. We know the al-kharaju bil-daman hadith, Prophet follows responsibility. We know the al-ghunm bil-ghurm hadith, which talks about the fact that you can only if you've actually exposed yourself to risk do you have a right to achieve or receive any profit. And this is the underlying principle. That the Islamic scholars and Islamic economists, even at some level, are arguing. Say, if you want to achieve a benefit or receive a benefit, then you must have skin in the game. It's not only Muslim thinkers that are saying this. This is also conventional economists' views. I mean, you have a significant portion of conventional economists that have the same view. And Nassim Taleb is one of those that, when I said skin in the game, he's written that book, Skin in the Game. And this is something that's an excellent read, if we want to understand how we should be more involved in transactions. But let's just understand where this claim comes from. So the Prophet ﷺ and the Sahaba Kiram, if you look at their transactions, they were active in trade. And being active in trade meant that they would take their goods and move it to areas like from Mecca to Madinat Munawwara and then to Sham and Syria, these areas, and then sell their goods. And of course, there was risk. There was risk of bandits and robbers, and there was risk of not selling it if successfully. Pricing and price discovery was an issue. So they faced all of these risks. And now there's an easy understanding that risk tends to permeate all forms of benefit in trade. If you relegate that to debt, it seems as if you're just shaving off an essential component of the Sharia understanding of how we make money. Now, we see that a lot of these debt-based approaches have led to certain instances, and perhaps we can talk about that a little bit later, global financial crisis, etc. But overall, our historical and theological foundations favor the concept of risk sharing and equity financing. And this is quite clear even in a hadith that's recorded in Mishkat, where the Prophet ﷺ is saying that the honest trader is the one that is going to be raised with the pious and the noble people on the final day. So we understand the importance of equity financing, but is there a scenario where the Sharia actually prefers equity over debt, for example? And now we don't have that text, or I am unaware of a text that says go for risk sharing instead of debt. We don't seem to have that very clear difference. We have debt that is practiced in the time of the Prophet ﷺ. We have debt that is practiced by him and his Sahaba Kiram ﷺ. So we see that this is not a prohibition, but at the same time, this is not a preferred state. And therefore, it is used to achieve a particular end. And that end would be an outcome that would be getting out of a difficult situation. One gets into debt, but one only gets into debt if there is a clear understanding that repayment will take place. Okay, so there is a repayment, and that's why we're getting into debt. There is a need, and that's why we're getting into debt. And there is a level of honesty between both parties. And that debt was primarily interest-free. There was no interest. Now, the discussions that we have today around, from Islamic economists, etc., and looking at debt being the something aboard, is primarily based on debt attached to some premium. And that premium is what makes that debt something that needs to be avoided. And that premium doesn't stay static. It actually moves over time and increases over time, as we know. And Allah subhanahu wa ta'ala has been very precise on that type of debt. In Surah Ali Imran, Surah 3, verse 130, يا أيها الذين آمنوا لا تأكلوا الربا أضعافا مضاعفة. We know very clearly, those of you who believe, do not consume debt, or do not consume riba, in this case, doubled and redoubled. So we know that prohibition of compound interest, and we see the effect of it. And this is a very famous saying, and I've been quoting this for many years, Obasanjo from Nigeria, your neighboring country, Sheikh Mohammed Sanu. He quotes in a G8 session in Japan in the year 2000, and he says that we borrowed, as Nigeria, we borrowed $5 billion. We paid back $16 billion. We are told we still owe $23 billion. If you ask me what is the worst thing in the world, I will tell you it is compound interest. This is his statement. So if we put that in context and understand why Islamic economists and Sharia scholars are saying that we need to stay away from debt, it is a lot of history that couples debt with interest. Now, is debt coupled with a profit markup any different? I think that's an important perspective that we need to look at. Whether it changes the dynamic. Well, of course, we know that there is no compound interest. We know that the late payment charge is limited to a ceiling in Malaysia and given out in charity. So we know that the markup is not meant to suppress or oppress the debtor. It is there to sell an asset and to make a profit and to allow for the time value of sale. So when we look at it from this perspective, we first have to say we're not comparing debt with debt here. We're not comparing apples with apples here. A debt based on interest is very different to a debt that is created out of a sale with a markup. And perhaps that needs to be clarified first before we move forward and start coupling everything all in one. The second point I want to state is that the approach of Islamic economists and even Sharia scholars on the preference of risk sharing is well-founded, And that is because we've seen the harmful effects of debt. And as I say, we perhaps can get into that a little bit later. But at the same time, my personal view is that it is often misplaced. It is often misplaced because it is a single paintbrush on all financing. And here, from the Islamic perspective, there needs to be a very clear classification, a more nuanced view of where debt is looked at in Sharia as something abhorred, and where risk sharing now trumps it, is preferred. And that means we need to create a hierarchy of financing in an ecosystem and an economic ecosystem. What does that mean? It means that if an Islamic economist or a Sharia scholar is looking at risk sharing as the preferred option, then that should be at the joint venture capital or the venture capital level. It should be at the private equity level. It should be at the investment banking level. And that's where it is well placed. Businesses that are looking for funding, the investor must benefit from the upside, but must be willing to expose himself to the downside risk as well. But as we go down the line, from venture capital and investment banking to commercial finance to retail finance, and then development and social finance, then we find that each of these segments basically supports different sectors of the market. And to use a single paintbrush that all debt is bad does not really make any sense, because a venture capital notion of applying debt is not even part of that thinking. Private equity is not thinking about debt, they're thinking about equity. But a retail bank is thinking about debt because that's how it manages its finances. And the customer it serves in the middle segment that's buying a car or a house prefers a debt approach rather than a risk-sharing approach. And then as you go down the line to a social finance and development finance institution, now they are in need and they will prefer a scenario where a portion of the debt may even be excused. And therefore, you now have subsidized financing, you have zakat and waqf that come into play, you have all of this different dynamic. So my argument here is that, yes, from the Sharia perspective, risk sharing and partnership funding and financing is an overall preferred method of making profits. Debt is something that should be looked at in necessity. It has its place. In contemporary practice, Islamic economists and Sharia scholars should perhaps be a little bit more nuanced in their views in placing the right pressure in the right place, by thinking about Islamic economics as an ecosystem rather than a single paintbrush, and therefore placing the risk sharing and the partnership and the profit and loss argument in the right sectors of the economy, and debt financing in the precise sectors of the economy. And then we look at social finance coupled with debt in the development finance and social finance welfare institutions of the economy. If we look at it from that perspective, we will see a more robust economy and a growing economy rather than a confused and chaotic situation where you have a group of individuals saying, no, risk sharing is the only way. Islamic banks are not living up to their ideals. Practitioners saying, you guys are crazy. We're not going to go down that road. We'll lose all of our depositors' money. We don't comply with regulation. We can't compete with conventional banks. We can't grow Islamic banking in that way. Have I missed something from your question?
Sorry?
Have I missed anything from your question?
No. You've over-answered it, but please carry on if you have any.
No, I'm done.
Okay. That was a very deep response. Right? There's so many layers to it. I'm trying to unpack it. I'm trying to see how I can unpack this. Okay, so you mentioned a lot of things. You said that debt is not prohibited, but it is not a preferred state, right? That's how you started off, right? You talked about the requirements for debt to be allowed, right? You spoke about how there has to be a need, right? It has to involve honesty, right, between both parties or from both parties, right? The customer has to intend to pay back, whereas the financier or the creditor has to not oppress, right, the customer, right? You went back to the Prophet's time, alayhi salatu wasalam, where you said that he, in fact, engaged in taking debt. He allowed for his companions to do so. And obviously, there are the Sharia parameters to, when debt is allowed and when debt is not allowed. And then you brought it back to the discussion on, what was it? You said it's very important that there is a distinction between interest-based debt and debt with a markup, right? So murabaha is different from a riba-based interest, right? That you called for that to be a more nuanced discussion, right? What direction I could take this in is this. Now you also mentioned before I pose the question I needed to ask for more context on it, because you said it's very important. Is you said that based on everything you mentioned, you said we cannot and we should not use a single paintbrush to paint all debt as evil, right? It's a tool of the devil, right? And then in your final remarks, right, and it was quite, not to say, it was just very notable, right? How you mentioned it. You said that we must understand that equity or risk sharing, rather, is the overall preferred mechanism to making profits, right? I hope I'm not misquoting you over there. Yes. Okay. Alhamdulillah, got that correct. Right. And then you mentioned that we need to place the right pressure in the right place, right? And that we need to limit debt for necessity, right? And obviously, as you mentioned, that there are levels to it, right? There's the retail level, there's the other levels, and we can't just have a blanket statement. There has to be a nuanced statement. But you did mention, or you did allude to the fact that, you mentioned clearly, honestly, that risk sharing is the overall preferred, right? But in instances when that is not practical, the circumstances do not allow for it to be the case, then we have to resort to debt. And when applying debt, we have to still limit it, right? The question there, at the end of all this summary, is are there, what I would say, what are the nusus, right? When we talk about debt in particular, what are the nusus somehow talking about what the parameters are of the Sharia when it comes to taking debt, right? Is there any context to that?
No. So in terms of nusus, we have examples that are particularly from the Quran and Hadith that we can draw in our understanding. And then the fuqaha have actually taken those nusus and have given us practical and pragmatic shurut or conditions and itar, a framework to understand the concepts a little better. So, of course, the very famous nas from the Quran is the longest verse in the Quran that talks about debt, and this is in Surah Al-Baqarah, verse 282. So, Surah 2, verse 282 tells us that, of course, you know the verse well. بعد أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم يا أيها الذين آمنوا إذا تداينتم بدين إلى أجل مسمى فاكتبوه. Now, this verse is not saying that if you enter into debt or avoid entering into debt, or it is prohibited to enter into debt. It is saying, oh, you who believe, meaning that it's addressing Muslims, and it's saying, when you Muslims, إِذَا تَدَايَنْتُمْ بِدَيْنٍ, when you enter into debt, that means a Muslim is allowed to enter into debt, okay? Just make sure that you write it down, And the verse goes on into an elaborate and beautiful explanation. And we like to say that the verse actually gives jobs to a few people. It creates career paths, because the verse talks about a scribe. and the scribe who is given those skills and knowledge to be able to write down the debt. And he should not be lazy, and he should write it down, and he should even be compensated. Now, the scribe in modern day is none other than a lawyer. Okay, that lawyer is the one who drafts that legal agreement. So it seems as if this verse is actually giving a very clear job to the legal profession. Now, the whole approach of recording it, and this comes back, from the ahadith that talk about the recording of these types of transactions, then we know that even the accountant is given a job, because he's the one that generally records the transaction. But he must be careful, because he can't record the transaction, that debt, with interest, because the hadith is very, specific. Okay, la'ana Rasulullah sallallahu alaihi wasallam. The Prophet sallallahu alaihi wasallam has cursed those that are involved in debt, and he very explicitly states the one who consumes riba. Okay, the one who actually gives riba for consumption. The one who witnesses the transaction and the one who writes it down. So all those four people, kulluhum sawa, all of them are in the same boat, and that boat has a big hole and it's sinking fast. So the accountant is given a job in recording the transaction, but at the same time, he should not be recording interest-based transactions. So the Nas once again tells us that debt is permissible in effect. Debt should be written down to avoid conflict. And the following verse, وَإِن كُنْتُمْ عَلَى سَفَرٍ, if you have been traveling and you are unable to write it down on time, and فَرِهَانٌ مَقْبُوضَةٌ, and if you take collateral or security, then that is good, that is fine. There's no harm on you for doing that. So now we know the Quran is not only telling us or allowing us to take the debt, it's also allowing us to take security or collateral to support the debt. And that is, a permitted type of transaction. Now, from the ahadith, we find that there are numerous ahadith that talk about the issue of debt, its seriousness in the Sharia, and its seriousness in ensuring that we actually pay it back. Now, if we go through all the nusus, naturally that will take a lot of time. I'm only going to highlight one or two ahadith that come to mind on the matter. One particular hadith that comes to mind is a hadith that is reported in Abu Dawood. And this hadith states, and in a lengthy hadith, and I will just pick out the portion of the debt, the Prophet ﷺ says, Inna sahibakum ma'surun bidaynihi. This means that your companion has been detained from entering into paradise on account of his debt. He's been detained, okay? And in another riwayah, another word is used, mahbusun, and he's detained. He is restricted from entering into Jannah simply because he has a debt which has been unpaid. And the Prophet ﷺ in fact continues, and he says, then I saw him, or rather the narrator says, then I saw him that he paid off all his debt. And then, of course, the other riwayah talk about him being given the permission to enter into Jannah, or the famous hadith of the Prophet ﷺ, where he did not pray over the person who was, with an outstanding debt, and only until someone forgave the debt would he, be praying over the person, showing the gravity of the nature of debt. Now, in particular, the Nas is precise on someone who is wealthy and that does not pay up the debt. Now, that is a serious crime from the Sharia perspective. The person who is wealthy is regarded as an oppressor if he does not pay back the debt, meaning he's just holding back the debt because of his procrastination or his greed or his love for wealth. And this is a serious matter from the Sharia perspective. So this is another part of the Nas that talks about the issue of debt. Now, another hadith comes to mind, and this comes from, this is in An-Nasa'i, where the Prophet ﷺ actually is recorded as having borrowed an amount. Okay, so for those that say, and I've heard some academics and scholars that say debt is prohibited, this is an unfounded and unestablished, kind of statement, and really, this is a very dangerous statement. The Prophet ﷺ had borrowed 40,000 dinars from a Sahabi. Okay, and when the wealth came back, then the Prophet ﷺ paid it back, and he said, "Barakallahu laka fi ahlika wa malik." He said, "May Allah bless your family and your wealth for you. Innama jaza'u salafi alhamdu wal ada." The reward for lending is praise and repayment. Now, for those that say that debt is not allowed, here the reward for lending is praise and repayment from the words of the Prophet ﷺ himself. And let's not even look into the Quran, which is also explicit on the matter, where Allah Azza wa Jal repeatedly states that who is that one who is going to lend Allah Azza wa Jal a debt or a loan. And here we know that the understanding of this is qard, that وَمَن يُقْرِضْ اللَّهُ قَرْضًا حَسَنًا is actually lending to those that are in need. So we understand that as well. Now, we have to also look at the nusus and the perspective of debt in its technical meaning. You see, dain is what we will normally translate as debt. Dain comes from the same root word as deen. It comes from the same root word as deen. And when we look at that deen, we understand that deen is a submission. Ultimately, Islam is that submission. Dain is that submissiveness to the creditor by the debtor. So it's a state that is not preferred, because that submission should be to Allah Azza wa Jal alone. So therefore, the objective that comes out of the nusus is that for the period that we are in the debt, we must be constantly aware and be cognizant of the fact that we must pay this back. So this dain is that submission to the creditor and ensuring that we are submitting to the conditions, the terms and conditions of the loan, and we need to pay that back as soon as possible. Those shurut, those conditions that are established must be within the Sharia. They cannot be with any interest, as Allah Azza wa Jal tells us in chapter 2, verse 275. وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. The trade is permitted, the interest is prohibited. The trade that results in debt, like murabaha, is not prohibited. It's not prohibited. However, it's written down, and the terms and conditions of this debt must be fulfilled, must be paid back. So I will perhaps stop there to simplify, just quickly the answer, saying the nusus talk about debt clearly. From the Quran to the Sunnah, there is no prohibition that is found in the Quran or the Sunnah in terms of debt. What is clearly denounced in the Sunnah is the fact that a rich person who does not pay back debt is an oppressor, and this is an offense. A person who has taken debt must pay it back as soon as possible, or based on the terms and conditions of the agreement. The taking of debt, according to the nusus, is not prohibited. The lender who supports and assists someone who is in need of debt is in fact in praise, and his family is blessed by the words of the Prophet ﷺ, and even from the text of the Quran. Perhaps let me stop there because there is a lot in the Quran and Hadith on the issues around debt.
Jazakallah khairan, really, for that insightful response as well. Okay, so we don't have too much time left, so I'm going to run through some of the points that I had over here. Right, so you've clearly established, right, that equity is the overall preferred state, right, but that debt has its role as well, that in instances of necessity, it must be obviously resorted to with the Sharia parameters, the nusus you laid out, that one should account for the gravity in failing to honor the debt, and the, as you mentioned, right, the Prophet refused to perform janazah prayer on someone who had outstanding debts, and other nusus, right? With that said, right, could you perhaps highlight to us, dear Ustad, some instances when one form of financing. Let's say, so when is debt financing preferred? Right, you mentioned already instances of necessity, right? Could you give us just a general view on case studies, perhaps, on when debt financing is preferred and when equity financing is preferred in the context of the Islamic finance industry?
So, here, when we look at it from the Islamic perspective, we have to look at the issue of maslahah. And, in usul al-fiqh, we've looked now at the Quran and we've looked at the hadith. We have the ijma and qiyas that do not prohibit it. But then we need to fast forward into the establishment of public benefit. Does debt create public benefit? And whenever we are in a position where we have the nusus, but we are unsure of how to interpret and apply the nusus in context, then we need to look at the supporting usul, the supporting principles and legal methodologies. One of those is maslahah. And maslahah mursala has to be a weighing of public benefit over harm. So maslahah versus mafsada. The time that debt is beneficial is when maslahah outweighs mafsada. And the opposite is true as well. We prohibit debt or avoid or abstain from debt when harm is created. So we need to look at economies that have actually benefited from debt. And we all know that statistics that come out of the World Bank and IMF will continuously tell us that countries that have access to credit are those countries that grow much quicker. In fact, academics will tell us that the reason why the Middle East was so slow in its growth was the fact that it prohibited riba. Okay? There's a famous academic, and I don't want to name him at this stage, but I'm sure you know who I'm talking about. He states that Islam is backward, and Islam is backward simply because it prohibits interest. Now, what he is saying in effect is that because debt with interest is prohibited, Islamic countries grow slowly. And whilst his premise may be invalid, his outcome is valid in that the majority of the Islamic countries were not engaged in heavy levels of debt, and they did grow slowly. That is a fact. But whether it was the fact that they didn't take debt or not, let's see. So World Bank and IMF say, as a country has better access to debt and credit, it has the tools to grow much quicker. So industrialized nations depend on capital to grow, and capital is borrowed at a cost. And therefore, they are able to grow at a much quicker rate than those that do not take debt or have no access to credit. And therefore, there is this constant argument of financial inclusion. There is the saying that, well, we must make sure that a country's citizens have access to finance, have access to banking, because there is a positive correlation between those that have bank accounts and the growth of an economy. So how does this actually grow an economy? Well, first of all, it promotes business growth because you have access to finance. And by taking finance, you can actually buy a lot more raw material. You can expand, you can develop. A small business can purchase new equipment, have more employees, increase productive capacity through this credit provision. The second one is that it enhances productivity because you can invest in automated machinery, for example, through debt. You can increase employment by opening up new chains of stores and hiring more people. So you are creating jobs in effect. You stimulate innovation because you can actually utilize the debt to develop new technologies and new software applications and new concepts. If you look at the Googles and the Metas and the Apples of this world, you see a lot of that innovation has been built primarily on debt. So it stimulates the innovation. It certainly boosts economic growth because development companies that are in construction will look at infrastructure development and will utilize debt to pay for that period of construction. And finally, you're seeing roads, you're seeing bridges, you're seeing big buildings, and all of that leads to connectivity, market connectivity, and higher economic output, and therefore ultimately development for an economy. It reduces poverty, because once you have access to debt, these microfinance institutions are providing small loans, and now people are being empowered as entrepreneurs, and they can become more self-sufficient from a financial independence perspective, and they are no longer reliant on the state. So debt has that advantage. And finally, of course, let me say that it improves and enhances competitiveness, because companies that are involved in debt are able to go cross-border. They are able to enter into international markets. And once they do that, they are boosting their competitiveness, they are increasing their revenue, they are becoming a lot more productive and contributing to economies that is not their source, it's not their mother country. So you have cross-border contributions, because they can take debt, and using this debt, they can actually grow much quicker. So these are some of the advantages of in being involved in debt-based instruments. I'll stop there, and perhaps if you have specific questions, but I will deal with that.
Okay. No, Jazakallah khair. I think that's a great answer. Okay, so let me pose a final question before opening the floor to the esteemed participants, who I'm sure are very eager to ask questions as well. There are a lot of, I think, a list of 10 questions in the chat box, right? So we'll see if I can run through them very quickly whilst you're answering this final question, Ustad. So the question is, what is the solution, right? What direction should, if you could gather all the key regulators, the key Islamic financial institutions, essentially the thought leaders, right? The key drivers of the Islamic financial institution, you could gather all of them in one room, and you could draft a policy on how you would like to see a balance between equity and debt, right? Or the usage of equity and debt within the Islamic finance industry, right? What future do you envision for the Islamic financial institution, right? You mentioned wonderful benefits for debt-based financing. You mentioned the great benefits of equity-based financing, right? But really, what does this future look like for Professor Ziad if he was the president of the Islamic finance industry?
Yeah, this is a very challenging one, and I'm only going to give you an answer based on my limited knowledge today, and it may change very well tomorrow. But right now, my position is that aside from the technical arguments and the justifications for debt and the justifications for equity, we need to look at reality, and reality right now will drive policy, and that policy must be for the short to medium term, and of course it needs to be generational in its thinking, long term as well. Now, perhaps if we did have the opportunity of gathering everyone that's involved in policy, I'd perhaps begin with the opening statement, and my opening statement would be something like this. It would say that as at 2024, the global debt has reached a record of about $356 trillion US. $356 trillion US. That's a global debt. If you look at the US, around 35 to 40 trillion alone. Now, debt in itself as $356 trillion doesn't mean anything. It could be good or bad. We need to measure it against something. But unfortunately, what we measure it against, generally, the GDP ratio, that means, are we producing enough to service this debt and beyond? Well, unfortunately, the debt to GDP ratio is above 330% globally. As Earth, as planet Earth, we are at 336%, which means that we are 3.36 times the amount we are producing, or rather, let me say, our debt obligations are 3.36 times the amount that we are actually producing, which means that we are primarily servicing debt with any of our new production. Debt may be good when it's in a particular context, but in the current context, debt is bad. We are in a situation where governments, businesses, households in developed countries, in particular the US, Japan, UK, France, are all drowning in debt. Therefore, policy should be how we reduce debts of nations, how we focus on production, how we focus on economic growth, and that economic growth has to be focused on development of education and literacy and good health. We have to look at the SMEs and the multinationals. Even MNCs are an important component of economy. And this is where our policies should be focused on. The reduction of defense budgets and security and this ridiculous level of the war economies. The United States in particular is a war economy. When it struggles with debt, all it does is it promotes war, and it has the history is there for the reading over the last few hundred years. It's been doing this, and you have the Western nations that follow this approach. This mentality has to stop, and we have to look at a mutually beneficial approach and policy. And this means that we need to distribute risk more effectively, number one. And distributing risk more effectively is we need to classify them in an economic ecosystem, as I mentioned earlier, have the equity and the venture capital in its right place, retail financing and development institutions in their right places, and they should be approaching debt according to their flavor. We should look at primarily economic stability, where we're encouraging innovation and entrepreneurship. The entrepreneurial mindset will be a key policy for the success of the nation. We should look at innovation and growth as subsidized approaches through government, and then we uplift communities through innovation. We need to include wealth distribution policies that are much more effective than they are now. The social finance instruments that we have at our disposal from the Islamic lens are in excess of 20. Zakat, Sadaqah, and Waqf are only the three most basic social finance components. We have infaq, and we have takaful and kafara, and so many other methods of social finance that have just not been deployed effectively. So it's creating social finance institutions that are institutionalized properly, that are efficient, that are transparent, and that actually utilize technology to maximize impact. So redistribution policies are essential. We need to instill a level of governance, corporate governance, within the developing countries, and especially the OIC countries, Muslim majority countries, that have a dismal record of governance. And Islamic institutions, finance institutions, need to lead by example to instill a higher level of governance and transparency. We need to create policies of economic resilience, where we look at safety nets of takaful for those that are most at risk. For example, farmers like pastoralists in East African nations that have cyclical drought and flood, they need to be protected. So takaful needs to be used more effectively from the government level and subsidization at that level. And I'll end off with this, probably the most important in my view is behavioral change. The biggest weakness we see in the Muslim world today is as knowledge increases and information and literacy increases, even about our own Sharia, we have many more scholars than we've ever had. The level of diligence and ikhlas and ihsan has been on the decline. We have scholars debating each other for the sense of ego. We have the approach to Sharia as dogmatic and orthodox, and either no room for innovation and growth, or we so liberal that as our teachers used to say, be open-minded, but don't be so open-minded that your brains fall out. So we have these two extremes of the continuum. We have the orthodoxy in scholarship, and then we have the liberals in the scholarship. We need to move more towards a practical, pragmatic, moderating approach as the Ummah is expected to do, so that they lead by example and make sure that behavioral change is effected. This is my most important aspect of policy: behavioral change, instilling the higher levels of sincerity, selflessness, ihsan. And without that, we cannot achieve any of the rules of fiqh. We need to understand, as the Prophet ﷺ has explained to us, that a Muslim is someone who achieves that level of ihsan, that he is sure that he sees Allah Azza wa Jal. And if he cannot, then he knows that Allah is watching him. That level of taqwa is an essential component. And if we don't have that behavioral component, then the debt equity discussion is useless. Any level of ibadah without any of the sincerity or ikhlas is something we really need to question. And we need to get back on the right path, inshallah. May Allah assist us.
Barakallahu feek, Jazakallahu khairan, for those very effective policies, right? Anyone in that room is surely that room is going to be filled with silence, right? Just, in an attempt to digest everything that was said, particularly the last point, as you mentioned, behavioral change, right? The constant effort, the jihad, right? In the right sense of the word, to achieve ihsan, right, through policies that promote economic resilience, transparency, wealth redistribution, financial literacy, and all of these policies, these wonderful policies, cannot be achieved, as you've underlined and mentioned since the beginning of this. There has to be a level of ihsan, a level of commitment, a level of honesty in doing so, because otherwise it is just another version of conventional finance. So barakallahu feek, Ustad, for that wonderful conclusion, right? I think there's no need to ask you for another conclusion. I'm not gonna, don't worry. Right now, I think I wanna open the floor for Q&A, right? So as you can see, I don't know if you can see the chat box, it is just filled with questions, right? So I'm gonna try to run through them one question at a time, inshallah. If I skip your question, dear brother or sister, please note that I am trying to bundle the questions so as to reduce the burden on our honorable Ustaz, who is also a human being. So let's have some rahmah on him. Right? Okay, so the first question that I have is, first question that I see on the chat box over here that I would like to pose is, the person is asking, how much of a responsibility is there on the Muslim community in advocating for risk-sharing instruments? Right? How much of a responsibility? Essentially, I think the person is asking, where does the primary responsibility lie? Does it lie on the regulators, the financial players, or is it the customers, right, which would constitute the Muslim community?
Okay. I mean, risk sharing is an important and essential component in the spirit of trade and financing in the Sharia. It's essential, and here perhaps we need to go back to Sayyidina Umar radiallahu anh, who taught us that if you are involved in the marketplace, then you will only be allowed to enter the marketplace as a merchant if you know the rules of the game. So if you don't know the rules of the game, then you stay out. So who is responsible? Therefore, everybody becomes responsible. Sayyidina Umar radiallahu anh saying, if you don't know the rules of the game, then you stay out of the game. So it's the responsibility of everyone to know the very basics of what is allowed and not allowed in trade and investment and partnerships as to what they are involved in. So here, the level of risk-sharing knowledge needs to be relative and contextual to what one is involved in. So everyone from the customer to the banker to the regulator, they all need to be involved in it, but at different levels. So the customer will be taking it from the perspective of how it affects his trade or her trade, whereas the regulator will look at it from a macro perspective, from a policy perspective, and really guide the nation on what would be a more stable approach to implementing a risk-sharing dynamic. So I'll keep it there because there are several questions.
All right, thank you very much, Ustad, for that. Some of these questions you've already answered. That question, by the way, was from Brother Imran Firdaus, thank you very much for your question, brother. I feel like a streamer right now on Twitch or something. Yeah. So as I mentioned, some of these questions you've already answered, right? So, for example, someone is asking your take on BNPL, buy now, pay later, right? But I feel like you've addressed it. You want to tackle that, perhaps briefly?
Yeah, I just want to tackle this very briefly because BNPL is something that's becoming quite powerful as a credit instrument for those that have been unable to take financing from banks or who are looking at a quick and easy way to get credit. Now, there's pros and cons to this. Without going into the details, generally, and you can read the research out there, BNPL users are more likely to be lower income. Now, this means that they are classified as credit invisible. In other words, they are financially excluded or credit invisible. This is a finance term that's used, credit invisible. Now, those that are credit invisible, they may also have lower literacy levels when it comes to finance and budgeting, and therefore end up exposing themselves to more credit than they can manage. So you can see how all of this is interconnected. So lower income levels, generally a lower level of education and literacy, and because of that lower literacy, especially financial literacy, they have challenges in budgeting carefully and feel that they need something when it's rather a want, and they use BNPL irresponsibly. So there needs to be, these guardrails, safety nets that protect users by giving them the literacy they need before they enter into BNPL transactions. So I'm not saying BNPL is bad. I'm saying that if we don't use value-based financial techniques, digital finance in particular, then BNPL can become a serious impediment in the growth of the lower income individuals. And this can be, quite a risky approach to broader economies. So BNPL needs to be used responsibly, and it gives an opportunity for financially excluded to come into the market, provided that they're not using it to buy their second brand new iPhone, or even a very expensive phone, which is really beyond what they can afford, simply because they are getting it on credit.
Okay, Jazakallah khairan for that response, Ustad. Another question. By that question, I should mention the name of the questioner. This is Kale, right? The person put their name as Kale, Kuala Lumpur, or maybe it's, I don't know, Khairul. Right, it's Kale. The name written over here is Kale. Shukran, brother KL. Brother, I hope, right? Or it's sister, doesn't matter. Another question over here is something you mentioned in your speech, I remember, but you mentioned it where you almost you frowned while speaking about it, and you very quickly passed over it. Dr. Ahmed is asking over here, well, he's reiterating what you were saying over the fact that there is a Sharia basis for for debt, right? Sharia allows for debt based on the numerous ahadith you spoke about. The Prophet engaged himself in taking debt, so it cannot be haram. And we're talking about debt that is allowed, obviously. The person is asking, Dr. Ahmed is asking, from your opinion, what do you think is the underlying reason for why some scholars believe that is haram, or why do they abhor debts in his words? Is it a legal reason? Is it a Sharia reason? Is it a psychological reason? This is his words, right? Is it a social stance? Where does this hate for debt come from?
Yeah, I did allude to it in my discussion. I think that where it comes from, there are two parts. The first part is that the conventional understanding of debt has always been interest-based debt, and therefore scholars abhor debt because of its linkage to interest. That's the first approach. The second approach is more of a Shari'i lens, and it's the numerous examples within the classical jurisprudence that show the seriousness, the gravity of being involved in debt, and the fact that if you are involved in debt and you don't pay it back and you pass away, this is a serious issue. If your inheritance or your estate has been unable to pay off your debt, these are, very, very serious issues. And we quoted the hadith of the Prophet ﷺ that stated that someone is in suspense. He's suspended. He's not allowed to enter paradise, even though all his other actions and ibadat give him entrance into paradise. He can't enter because of his, restriction, because he owes money. So that's why the scholars of the past have been quite diligent in guiding us away from debt. There have been even those that prohibited getting involved in debt simply because they said that getting involved in debt is a level of submission that is not meant for human beings. It's meant only, as a submission to Allah Azza wa Jal. And that relationship, that dynamic, really causes inequality and an imbalance in society. And therefore, debt should be avoided at all costs.
Okay, Jazakallah khairan, Ustad. This is not a question, but this is from Prof. Muhammad Khabir. Professor Muhammad Khabir Hassan from the US. He says, Salam, what is your WhatsApp number? He's asking over here. So please do reach out to him. Prof. Muhammad Khabir, I've conveyed your message, right? So the aman is off of me. He put his number over here, so I'll share it with you later, inshallah, Prof, privately. Okay, so a question over here is, and I know we're over time, right, Sheikh, if you don't mind, yani, right, it's amana, your time, obviously, so if you don't mind, we can go a bit. It's fine, yani? Okay, Jazakallah khair. Hopefully we'll do another 10 minutes maximum, yeah? Okay. It says here, considering the competitive finance, this is by Brother Saifullah Azad. He says, considering the competitive financial market, how do Islamic financial institutions reconcile between the Sharia's preference for equity with liquidity demands and profitability pressures that often favor debt-like structures, right? So I think this goes back to what you were mentioning earlier between how risk sharing is encouraged in the Sharia to some extent, in some contexts, but then the regulatory system, conventional-based regulatory system, discourages it. So how do Islamic financial institutions reconcile or balance between this and this? Yep.
Yeah, this is a huge challenge, and understanding from the regulatory perspective that they are looking at stability, economic stability, and were they to allow risk sharing as the primary component of finance, their fear is that the result would be an unstable economy. But the reality is that a fully debt-based economy is also an unstable economy, and we've seen the impact of that. So regulators probably would need to, look at that sweet spot between a fair level of debt, which we understand is essential, but not a complete portfolio of debt, which we understand is untenable and ultimately leads to the destruction of economies. And we're seeing the cyclical financial crisis driven primarily by debt. And this is because of an imbalance. So going back, what can the regulator do, or rather, how can an Islamic financial institution operate within this? It's hugely challenging. Even the introduction of mudaraba as a savings solution within a bank is a rather misplaced instrument because of the regulation. The regulation talks about deposits and then says the deposits are protected and guaranteed. Whereas we know the mudaraba is like a collective investment scheme that really does not belong within the banking system. It's an asset management or an investment product. But our attempts to move into more of a risk-sharing scenario, encourages us to bring mudaraba into the banking system. So my advice here is that we need to look at the regulations, but also operate within the right context. Asset managers, investment managers, they will apply risk-sharing investments. They will apply the mudaraba and the musharakas. As with concern to Islamic banks, they act as intermediaries. They provide funding and financing. And therefore, we need to be careful on the types of instruments that we encourage them to be involved in because of regulation. We don't only have Islamic banks in an ecosystem. We have a balanced ecosystem. And that's what we would need. More investment and asset managers, more balancing, moderating variables, so to speak, where banks are not the only institutions managing finance and economies. Then it would make sense. But if it's the only the Islamic bank that you are relying on, now you will have an imbalance because they will be, heavily on the debt side.
I see. So you say that introducing mudaraba within the banking sector in particular, not the financial sector as a whole, but particularly within banks, might be misplaced, right? Hence, the solution would be to explore other financial institutions, whether it be microfinance institutions that cater to the target market or the target participants, right?
And I'm saying this only because if you look at a country like Malaysia that has gone through mudaraba, has implemented it, has stopped implementing it, has implemented it again, and has not really succeeded in implementing it because of numerous issues like asset tagging and the issue of refinancing their own assets using the mudaraba, these challenges. So it's not to say that we need to take mudaraba out of the banking system, but we need to place it in the right subsidiary to be able to balance the system. Yes.
Wonderful. Okay, Jazakallah khair for that clarification. Okay, so there's only time for one more question, depending on how Prof answers this, right? Because otherwise we'll be going overtime for the second time, and I think Prof would start questioning my sincerity, right? So last question, inshallah, is by Dr. Habib Lai. And before I pose this question, I do want to mention that there were a lot of questions over here that I can see. Some questions I haven't skipped them because I intend to neglect them. I've skipped them because Prof did mention, he did discuss them already in the discussion. Perhaps you posed the question before he answered them, or perhaps you came after he answered them. So in that case, this webinar inshallah will be uploaded on YouTube, right? So do check it out over there. If you didn't get your question answered, then there's a huge likelihood that it was answered already, right? So please do go back and watch it again, and inshallah, you will find your answer over there. Other remarks were made, right? I put them to the side. Very important, very wonderful remarks, such as comment by, forgot who exactly, should mention this person's name. Yes, brother F.A. Umar Sanyang, brother from Gambia. Yes, he says here that tax incentives, right, are necessary to promote these risk-sharing products, right? Tax reforms that achieve tax neutrality, for example, for Islamic financial products. All right. So with that said, right, hopefully there's no hard feelings against me, right? Please don't make dua against me. I am an innocent, humble man here just to ask a few questions to the Prophet. Okay, so the last question, inshallah, would be as follows. This is by Dr. Habib Lai Juma. He says he would like some clarification on how Islamic financial institutions should balance between generating wealth, right? And well, he says wealth generation and value creation, right? So obviously, generating profits versus creating value, right? He says from the Sharia perspective, right? If you have any thoughts, please do share, Prof.
Here, and perhaps it's apt that we can end with what we use in the Sharia as the umbrella of understanding the jurisprudence, and that is the maqasid. So although there is an overemphasis of the maqasid, I do believe, but a comprehensive understanding through the maqasid may be the answer to this question. If you look at the maqasid, we find that it tells us about the hifdhul mal, or the preservation of wealth. So when we look at wealth generation, we need to first look at, we need to also understand wealth preservation. So wealth preservation is to ensure financial resilience, and this can be done through the banking system, through the asset management, etc. From that, that wealth preservation is as a derivation of wealth generation, and wealth generation is derived through sustainable and ethical means. This is a very important perspective that is often ignored. Ethical means, we know that you should earn it in a halal way, but the sustainable and responsible manner, that is fairly ignored, especially when it comes to Sharia scholars' advice and fatwa, specifically opinions and verdicts. The Sharia decision-making process is only more recently integrating the ethical or the sustainable part of value creation and wealth generation. This means that we must promote aspects that talk about reducing carbon emissions, talking about low wastage and reduction in the wastage of water and food and usage of our natural resources. So value creation should be based on this approach, an ethical and sustainable mechanism. Ultimately, both wealth generation and value creation must be within the auspices of redistribution. That means we generate wealth, but we generate it in a manner that ensures we pay our zakat, we do give out sadaqah, we do establish waqf or endowments, and we build our nations from the bottom up. And this means true value creation. So wealth generation is useless if we have not created value through establishing and protecting the vulnerable and the fragile communities of society, building them above the poverty line. Now we are creating consumers for our own businesses, and this will continue in the cycle of wealth generation. So they have to be seen as two separate issues to work on, but then when we actually join them in redistribution, we realize that we can't do without value creation in order to make more money or generate more wealth.
I see. And should the frameworks by which these practices are carried out, should they be based on existing frameworks like the ESG and whatnot, or do we develop our own frameworks, or do we adapt these frameworks, the new frameworks, into these existing frameworks? Right? I know it's a heavy question, but
I assure you that's another lecture, because there's so much to say around that.
We'll leave that for the next one.
Just in half a minute, I will answer it in this way, and I will say that the proponents that argue that we should go back to the maqasid, because we already have it, have a valid argument. But for them to say that let's ignore the SDGs and other frameworks that are available to us, that I think is just hubris, because we have not effectively established maqasid metrics. We have not effectively established maqasid-driven strategies and corporate value intent to say that we have homegrown impact on the ummah or the world or humanity. And therefore, we are minuscule at this stage. It's a pathetic state that we are in, unfortunately, that we have to play the follower. So until and unless we wake up, we can't denounce or remove the usage of the current frameworks. So let's wake up and establish our own as well.
Let's wake up and establish our own. Jazakallahu khairan, Professor Ziad. That's a wonderful way to end it. Unfortunately, we have not only exhausted our time, but we've gone over time, and Prof. Ziad has been very generous in allowing to stay on beyond the time that was allocated. So I would say thank you very much, firstly, to Prof. Ziad. Jazakallahu khairan for this this sit down, right? It's actually a segment that I'm intending, that the company Adil Advisory is intending to start, right? It's titled On the Shoulders of Giants, right? Inshallah, right? I'm going to patent that title, inshallah, very soon. And this was hopefully the first of many wonderful sessions to that end. Thank you very much once again, Prof. Ziad, for your time, for your generous response to the call, right? I really appreciate it.